The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. Here we are. It's Paul here. It's Monday, 10th of December 2018 for what's session 19 of Mastering the 4 M's of Trading webinar. Hopefully that you can all see my screen. Hopefully you can hear my voice. We're on the sort of trading floor today, so there might be a little bit of noise in the background. As you can probably imagine, there's here we are. We've just had some Brexit announcements there for about 30 minutes or so ago. So there's a little bit of trading and exuberance going on in the room. But hopefully you can. Hopefully, as I said, you can all hear my voice and you can see my screen and see my charts and slides, and that's then we're good to go. As always, we'll quickly begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Marcus carries a high level of risk which is not suitable for all investors due to their complex nature. Before entering into a client agreement or making a transaction, please make sure to read the terms and conditions of the service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by the Admiral Markets Group for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 as per our negative balance protection policy. Well, ladies and gentlemen, why would you be interested in trading with Admiral Markets UK? Well, as you can see there, for both the DAX and the euro dollar, they have enormously competitive spreads there during the main trading hours. They also offer the MetaTrader MT4 and MT5 platforms, with the Admiral Market Supreme Edition, which is a superb addition to trading platforms. And Admiral Markets is truly a global brokerage these days. As it says, OneWorld Global office, and they have a variety of global offerings around the world. So please don't hesitate to get in touch with your account representative, and they'll be able to guide you to working with the best regulatory environment. So there you go, ladies and gentlemen. So as always, I'll start with a quick little bit on my particular trading approach. As always, I describe myself as a discretionary-based method trader. By the end of these sessions, you'll understand what that means. Primarily, I look to be a dominant trend swing trader, and that's something we've talked about throughout all of these sessions. I'm very big on keeping things simple, and I'm looking to blend fundamentals, technical sentiment, and geopolitics into my trading decisions. Primarily, I work in the FX indices commodities spaces, and my philosophy is really to buy strength and sell weakness. That's what I'm looking to do. And ideally, I'm looking to use pullbacks for entries for the majority of my trades. And I look to sort of work on the weekly, daily, and the 4-hourly charts, which is where our main focus has been during these sessions. When I do some intraday trading, then I'm primarily a mean reversion trader, and that is something that we will look at in 2019. So, as always, I like to set the expectations for our session together. For me, it's about educating on the 4 M's of trading, so you can go in and analyze any market, be ready to trade it, and hopefully also raise your self-awareness about managing risk and also about managing yourselves. For yourselves, ladies and gentlemen, I always ask that I appreciate we have a broad range of experience in the room, that we are under time limitations, and so I can't always go into the depth that people would like. So I always try and focus on the tools that you can use tomorrow, something that you can take away from every session and work and use and develop in your own trading skills and business. So, as we know, mastering the 4 M's of trading is about understanding those 4 major M's that we need to understand as traders: markets, method, money, and myself. And the reason being is that there is a sweet spot there that invariably, when a trader understands those 4 M's and master those 4 M's, that is when they're in a position to sort of trade with, let's say, enhanced performance. And if as a trader you're struggling a little bit, well then invariably you want to have a look at which one of those 4Ms that you might be struggling with within that particular mode, and that will give you an idea of where you need to work to basically bring your trading business up to scratch. So if you remember, ladies and gentlemen, last week, okay, where we talked quite a lot about psychological stop losses, we talked about common sense exits. But what we were talking about was, the sort of the message I wanted to get across to private traders is that, people come to me, or they look to work with, a coach or a sort of an educator, and they very often they're looking for a revolution. Okay, they've had a little bit of a challenging time. Basically want to just throw the baby out with the bathwater and just start fresh with a clean piece of paper. And actually what is normally required is that for most traders it's more about evolution than revolution. We talked about it in terms of understanding that when you look at your trading, and if you look at your trading through the prism of those 4Ms of trading, what you'll realize is that there are things that you are doing well. Okay, there are things that probably need some development, and there's some things that you probably need to scratch and get rid of. Okay, and sometimes working with a coach or working with another trader, that they can actually provide that sort of objective sounding board that allows you to work that out within your own trading. But realistically, what we're looking at and focusing on is more about evolution rather than revolution. And one of the challenges with that is, of course, as private traders, you sat there, you're working hard, okay, trying to be the best trader you can be, and so very often, traders quite often, they fail to see the wood for the trees, as we say in the UK. There's that kind of lack of objectivity, and sometimes, going through these sessions here that provide you with an opportunity to just to step back, sort of take a fresh look at what you're doing, okay, to organise your thoughts and your intentions and your directions. And then re-engage and proceed. Okay, and that's what we're looking at, and that's something we'll talk about a good bit next year in terms of how to work on particular slumps. I saw when we talked about last week about psychological stop losses, what we talked about was that macro trading requires a high degree of skill, focus, and repetition. Life events such as birth, divorce, death, and other loved one, other emotional highs and lows are obstacles to success in a specific field of finance. And that is just a fantastic quote from Paul Tudor Jones. Okay, he's in Market Wizards. He's a supremely successful and capable trader. Okay, so if you don't want to sort of believe me, you should definitely take on board what Paul Tudor Jones is saying. So, ladies and gentlemen, what I wanted to talk about today was trading plans. Okay, in particular, that's what I wanted us to focus on. That's where we wanted to go. And there's a great quote from Benjamin Franklin. Okay, namely that by failing to prepare, you are preparing to fail. Okay, and that's what it's a great quote by the great man, the great American Mr. Franklin, but it is very true. By failing to prepare, you're preparing to fail, and that doesn't matter really what endeavor you're involved in. That will actually sort of carry through into your actual trading itself. So if you think about it, ladies and gentlemen, what we've talked about over the last couple of months is we've talked realistically about trading tactics. Okay, what we've done is, if you look there on the right, okay, we've talked about pin bars, engulfing candles, inside bars, 3-bar reversals, key reversals or momentum reversals, KDRs or 1, 2, 3 combos, power of 20, the 1, 2, 3 pattern. Okay, we talked about those, and they are all on the webinar archive that you can access on the Admiral Marcus YouTube channel, and also on the Admiral Marcus Group Facebook page. But they are actually, they're tactics really. they are particularly tactics, okay, that we would utilize based upon the market environment that we find ourselves in. Remember, one of those 4Ms is about understanding what the market environment we're in, okay, whether it is a trending market, whether it's a consolidating market, whether it's a market in transition. And by understanding that market environment, well, that then allows us to sort of to employ the correct methods. And within methods, okay, then we have particular trading tactics, and that's what we've done and focused on for the last few months. Everybody loves a new trading tactic. Everybody loves a sort of an opportunity to do that, and that's actually what we've focused on. Okay. But what we're going to look about is maybe like how they fit into sort of a larger trading plan, right? People talk about trading plans, and what I'm going to hopefully to do today is actually just sort of identify that a little bit better in terms of understanding what trading plan is and how it actually can help you in your your own trading business. So, as we said, new traders often talk about strategies and systems and methods of trading plans, right? But actually, what do they mean? Okay. Well, at the top level, we have our trading plan, right? That, as you can see there, trading plans are a set of rules consistent with the trader's chosen methodology, and system that govern how trades will be executed in real time. But what we actually like to do, or what I like to do with my own clients, is to actually break it down even further, right? A trading plan can and should consist of your strategic business plan and also your tactical trading plan, right? And I'm going to explain that a little bit more for the remainder of this session today. So, in terms of the strategic, what we're looking at is as I said, is the actual overall strategic business plan. Okay, that's what we're actually looking to achieve. All right, that's like any strategic business plan. That any business doesn't matter whether it's your trading business or whether it's Apple or BP or SO. Okay, it doesn't actually really matter. It's having a strategic business plan. But then also, what we need is a tactical, right? That's actually how you're engaging with the market day to day. That's your tactical trading plan. What are you actually going to do today, right? And that's what we're going to have a little look at for the next few sessions. So, lots of people, especially new traders, they look at this and think, well, why bother? What's the point of having a strategic business plan? I'm a trader. I doesn't really care. But remember, it's about being a professional with a business. Okay, there's lots of people in this industry who are amateurs with hobbies, right? It's your job to be a professional with a business. And I can assure you, after years and years of trading myself and working with all sorts of, especially very capable traders, the ones who are consistently profitable and successful, they are professionals with a business. Okay, there's no escaping that. But the important thing is that that doesn't require you to be a superstar or a rock star. Being a professional with a business is just about you having the right attitude, okay, and the right intentions, and the right actions, behaviours, and habits within your business. And as it says, that all sustainable, profitable businesses have a strategic business plan. As I said, it doesn't matter whether you're Apple or Amazon or BP, okay, or Barrett Homes, okay. All of them have strategic business plans, and you should be no different. So, as a kind of a top level view of it, a strategic business plan, right? What's that about? Well, that's business plan is about. It's about the what, it's about the when, the why, the where, and the how. Right? It's starting to put the meat on the bones. Okay, this is more to it than just saying, I trade pinballs on your $5-minute charts. Okay, that is a tactical trading plan, right? This is about the what, the when, the why, the where, and the how. Okay, how you can actually build your business, right? It serves as a reminder and a yardstick of your goals and your progress. It's important that you read it every month, okay, and it should be in your diary to actually review it, okay, every quarter. Right? Where you'll have quarterly goals, but also to be able to review it and update it. But what it does do is it helps you focus, and it will help you improve. Okay, you might not understand it or recognize it today, but I assure you that it will help you focus and improve, and that's ultimately what you're trying to do. This is not about you being a 2-week wonder in trading. This is about you being a 2-decade wonder, okay, as a trading business. Because if you love trading, if it's part of your life, you're going to want it to be part of your life for the rest of your days. And so, with that, the way you achieve that is by actually having a correct business plan that you can build and take forward. So, I quite often use this quote from Sun Tzu because it's brilliant. It's a great quote by the great Chinese man. All right, strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat, and it's absolutely right. I quite often see people in the sort of trading industry. They might have an overall strategy, but they don't actually have tactics. So they are just sort of dragging themselves slowly but surely forward. Then on the flip side, I see lots and lots of traders who have tactics, okay, but they have no real strategy, and it's just a bit of noise before defeat. It's important to understand the difference between strategy and tactics, and it's important to actually have them both and to meld them together so that you have an effective way of operating in your in your trading business. So, we had a bit of a brief look at the strategic business plan. Let's have a little look at the tactical trading plan, okay? So, as I put there, there's many high probability trading systems out there, right? We've talked about it before in the earlier sessions. You can go onto the Google, and you can put in for tactical trading systems, okay, and you'll find thousands and thousands out there, right? So you can find thousands of them. The world is not short of trading systems. So, why would you bother actually creating a tactical trading plan? Well, one of the problems is most people who set out to become traders, they find it difficult to stick to their trading system. What it means is that they become they're sort of inconsistent. They're indisciplined, right? They'll have a trading system. Usually might trade for, I don't know, 7, 8, 9, 10 trades, okay, but as soon as they have 1 or 2 losing trades, well, then in fact they ditch it, and then invariably they're looking for the next best thing as a trade. They're looking for that holy grail of trading system, a trading system that provides constant profits and no losses whatsoever. And I can tell you here and now, ladies and gentlemen, that just doesn't exist, right? It just doesn't exist. And if you're presently in that chasing your tail like that, then do yourself a favour and stop away. But not surprisingly, people who have the ability, the inability to stick with the system, they usually result in poorer results for themselves. Okay, it's about having a tactical trading plan that you can execute consistently, session after session, right, and be able to gather the data from that and tweak and refine your tactical trading plan based upon the data and the feedback loop that you find yourself in. So, why do people have them, or why do people ignore tactical trading plans? All right, well, there's a few interesting reasons here. One of them, strange enough, you might find is overconfidence. Okay, people have a few successes, they start to have a little bit of a good run on their trading. And then what happens is they start to believe that that it was you rather than your system that is selecting good trades. Okay, people start to get euphoria. Okay, they start to think that they know and understand the market better than anybody else in the world, and very often that basically causes trouble, because invariably what happens is when people get overconfident, they start taking sloppy trades, or their risk management is very, very poor. Okay, their discipline to follow their risk management is poor, because they start risking more because they think they're invincible, and invariably they find out quite rapidly that is not the case, ladies and gentlemen. And one of the other reasons is it's just human condition. It's about a need for variety. Right? Sticking to the same system can become mundane, and people just seek change. Even if they've got a tactical trading plan or trading system that is profitable, they can find it very difficult to stick to those same systems day in, day out, and they just seek change. Okay, they wander off the ranch looking for a bit of excitement, which of course leads into the next one, that need for excitement. So strategy gives you a steady stream of small winners. It's often tempting to go for a home run once in a while, okay? And once again, hopefully you can see that this is just an element of people being indisciplined. They're not following the plan. They're not following the trading strategies, okay? They're not following the trading systems. It's just the human condition, okay? Need for variety, need for excitement means that they start trying to hit a home run of a trade. And there's also just a general case of a need to be trading. One of the things that challenges lots of private traders is that they overtrade. Okay, they overtrade because they've been conditioned that they need to be in a 9-to-5 day job, or they need to be constantly doing something. And and if they're not in the market, if they're not pulling the trigger on trades, they feel as if they're not working, so it leads to overtrading. As a general rule, overtrading usually results in poor performance, right? And in the medium and long term, it always results in pain of some sort. Admittedly, some people need the buzz of being in the market, right? And if the system doesn't give them a trade, well, then these people go and make one up, right? They become impulsive, or they just knee-jerk reactions and just trying to take trades like that. Okay, and invariably that never ends well. That never ends well. So having a tactical trading plan is something that actually helps you avoid overconfidence, need for variety, need for excitement, the need to be trading. Okay, it helps you keep you disciplined and consistent. It helps you keep on plan. Okay, that's what it's there to help you. Some of you may, here today may have already realised that. Some of it might be completely new to you. You might have thought, well, I don't really need it, Paul. It's I don't need it. I'm brilliant. Me, I'm a super guy and stuff. I've had a couple of months of being a winning trader, and I'm very pleased for you. That's wonderful. I'm very pleased for you. But the reality is that if you don't have a trading plan, a tactical trading plan to keep you on the straight and narrow, the likelihood is that the human condition will cause you to undo all your good work, and that's why having this tactical trading plan can help you. So what we see there is that a tactical trading plan, it provides you some structure, consistency, it builds discipline, and it also reduces errors and what we would call emotional leakages. Right? Having a tactical trading plan, it provides you that structure that most people need. Most people have been conditioned to need that element of structure, and they also need to be the element of consistency and discipline. But here's the thing: it's very difficult to be consistent without being disciplined, and it's very difficult to be disciplined without being consistent. Those two things are quite complementary, okay? And by doing both of them, you tend to work and build both of those traits. And by doing that, having structure, consistency, and discipline, well, then invariably you start to reduce your errors, okay, and also you reduce your let's call it emotional leakages. There's very less impulsive trading on the markets. And then the overall effect we're looking for is that it looks to improve results. Okay, that's what we're looking for. That it's looking to improve results, and ultimately as traders, that's what we're trying to do, isn't it? We're trying to improve our results. Okay, in every way, shape, or form. That never stops, whether you've been trading for 2 weeks or 2 decades. So, how would we look at creating like a tactical trading plan? Right. Well, what I have kind of surmised, all right, from my own work, from actually working with other traders, is that a tactical trading plan, okay, should be very simple. It's almost like a single page. We want it as a checklist style, okay, and you'll have heard me talk many times about reading the book, the Checklist Manifesto, which is a great book about understanding the importance of checklists and how they can help us operate effectively in stressful environments. It should be very clear and very easy to interpret. And I put there, 10-year-old kid can trade it. So if you have, if you're a parent, you have children, it should be kind of simple enough that you could give it to to your partner or your children, and they should actually be able to follow it and trade the markets. Okay, and if they can't, if it confuses them, well, then the likelihood is it's confusing you at some time and place as well. It's not simple enough. It needs to be broken down. It should always define your risk management principles, and that's the sort of section we're going to be coming on to in the next week and next couple of months, okay, as we sort of focus on risk management. But it has to be very clear about what your risk management principles are, and it should also be very clear about what your entries and exits are, okay. We're very clear on where you get into a market, and it also should be very clear where you get out for a loss, but also where and how you get out for a profit. It's about understanding your exits, okay. New traders are fascinated by entries. Professional traders are fascinated by exits. Okay, that's what they're looking at. Where am I getting out? Where will I get out and take a loss? Where will I get out? If I'm going to be taking a profit. Okay, exits become supremely key in terms of what you need. So I thought I'd just give you a little example. This is like an old one for myself. This is actually very old. It's about 10 odd years ago, but it's it's just a very simple. It's a very simple tactical trading plan which tells you what needs to happen for a long or short. It's just a simple series of checklists of questions that if I get the answer for, well then the trade is on. Okay, it's very clear, very simple. Okay, and as I said, it's one page, and I can actually give it to somebody, and they can actually use themselves and work with it, and that's the way it should be. So, what is it we've talked a little bit about? What is it you're going to gain from having a strategic business plan and also from a tactical trading plan? Well, the thing is, when you combine those two plans along with good record keeping that we've discussed in the last couple of sessions, well, then what happens is you start to build a picture of your strengths and weaknesses as a trader. You'll also start to get an insight into what your preferred trading style is as a trader, and ideally you're trying to work out where is your business most profitable. That's it. Now, once you start to see where your business is most profitable, well, not unsurprisingly, that itself also helps keep you focused. Okay, if you can see where you are operating as your best as a trader, well, that makes it much easier to be focused, doesn't it, ladies and gentlemen? Okay. After all, we are here to build a business. Okay, we're here to build a profitable business. And so, by being able to understand your strengths and weaknesses, about getting clear on what your preferred trading style is, then you're starting to understand where that business is most profitable, and that's what I want for you. That's what I want for you. I want for you all to build and run your own successful trading businesses. So, there's a little bit of a couple of takeaway points. Well, if you're trading at the moment and you don't have a tactical trading plan, well, then my free advice to you would be stop everything. Okay, just stop it. All right, and take a little bit of time. Okay, sit down and create one as soon as possible. Doesn't matter whether it's handwritten on the back of an envelope to begin with, or it's it's a fancy PowerPoint slide. Just get it down, get it done, and post it somewhere visible. Right? Just post it somewhere visible. Now, I don't expect it to be perfect the first time you do it, but actually what it should be is a case of, every week or every month, or if you're working with your coach, just making sure it's part of your routine that you just review that to make sure it's very, very clear. Because by actually having to, write it down and hand it to someone else, that shows you very, very quickly where there are any gaps in your thinking. Because I assure you, the more you need to understand those gaps, the better. Because especially if you're, let's say, an aggressive intraday trader, the gaps in your knowledge and your work will actually be exposed very, very swiftly if it's not done. So as I said, just sit it down, get working on it, and get it started. All right. And I think, as I said, in terms of what's understanding as well, amateurs, they see strategic business plans and tactical trading plans as a waste of time. Right? They just want to focus on the execution of their trading system. Right? That's all they're interested in. But here's the thing: professionals see it as an investment that develops and improves performance over time. And if it's going to develop and improve performance over time, well, then you're giving yourself the best chance to improve your profit and loss of your trading account. Once again, I want you to run a successful trading business. And so, as I said right at the start, it's about you making a choice to either be an amateur with a hobby or to be a professional with a business. The choice is yours, ladies and gentlemen. It doesn't matter. You don't need to be some rock star hedge fund manager to do that. Okay, that's a simple choice. You're either an amateur with a hobby or you're a professional with a business, and it is as simple as that. So there you go, ladies and gentlemen. For the last 5-10 minutes, I thought what we'd do is we'd have a look at some of the charts. Okay, we've had a bit of an interesting afternoon. Okay, this is for the 10th of December, and we'll have a look at talk about. We're looking at as we focus more and more on the charts as we go deeper into the ideas we discuss. Well, then we're going to be looking at things like the dollar index and then 28 major FX pairs. That yes, there are many others there, but for the purposes of these sessions, we're just going to focus on those 28, which is just really the kind of the crosses between the dollar, sterling, euro, Swiss franc, Japanese yen, Aussie, Kiwi, and Canadian dollar. Okay, that gives us enough. That gives us plenty of opportunities and charts to look at. We can also we'll have a look at some of the major indices. Okay, so the S&P, the Dow, the Nasdaq, FTSE, the DAX, the Nikkei. Some of the major commodities. Okay, the hard commodities, oil, gold, and silver, and copper. We're interested in. And you'll find looking at some of the equities, okay, in particular some of the big American equities, provide us with some interesting opportunities over the course of 2018. And also, once again, the cryptocurrencies have also provided, and Admiral Marcus provide access to Bitcoin, Ethereum, Litecoin, Ripple against the US dollar, and they in themselves, being able to understand them will provide opportunity. So across that broad spectrum of asset classes, there will always be plenty of opportunity for this. And by doing that, by making sure we understand it, well, then that gives us the best opportunity to have the best sort of understanding and ability to master that first of the 4 rounds. Okay, understanding markets, because if you understand what the market environment is, well, then you're in a position to understand when your method is at its most effective. If you're a trend following trader, but the markets that you trade, let's say the indices markets you trade, are all range bound. Well, it doesn't really matter how great that trend following system is. If the markets are all range bound, you're going to struggle. Okay, and part of it is about building the kind of the knowledge and the nous to be able to recognise what market environment we're in, so that we can actually either employ the right method, or if we don't have the method, we can actually just sit on our hands or go looking asset class to give us some opportunity. So, as always, ladies and gentlemen, remember, we are here to talk about, mastering and managing those forms of trading. So it's about understanding markets, methods, money, and myself. Working out, are they all in alignment? Because if they're not, then you shouldn't expect outsized returns. Or if you're having a little bit of a challenge in trading, take a little bit of an inventory about how you're doing against those forums of trading and start to work out where, if anything, the challenge might be. As a general rule, if you start at the myself bit, 90% of the time you're going to find where the challenge may be, or where the obstacle block might be, and then you can start to work on actually sort of adapting and overcoming that obstacle. So, as always, ladies and gentlemen, if there's some questions that you have from this particular session that's caused you to think, or if you're watching this on demand on the YouTube page of Admiral Marcus, or on the Facebook page, as always, you can get in touch with your account representative at Admiral Markets. The number there, the London number there is 02077264003, or you can email them at hello@admiralmarkets.com, and they'll be very, very happy to either talk you through elements that we've discussed here, or to give you a bit more in-depth insight into the various offerings that Admiral Markets provides to both professional and retail trader clients. So there you go. I hope you find that useful. As I said, let's try and switch across to the charts. We'll have a look at the charts here for about 5-10 minutes. As I said, it's been a pretty interesting last few days. So there you go. I'm hoping you can still hear my voice. I'm hoping you can still see the screens there. Okay, I've just switched across to the charts. What I've got up here is I thought I'd bring up here is this is British pound sterling. This is a profile I've got here. Okay, so we've got the eight major sort of sterling clusters. So on the top left here, I've got pound against dollar. I've got the euro against the sterling, pound against Canadian dollar, pound against the Australian dollar. Bottom left here is pound against Japanese yen, pound against the Swiss franc, pound against the Kiwi dollar, and here in the bottom right is the FTSE 100. Okay, so one of the reasons I have, and this is just a profile that I've just set an empty for as the British pound, because hopefully, as you can see, what I can do there is I can very, very quickly take a look at what the British pound is doing, and try to understand where it might be strong or where it might be weak against the other major currencies. So, not surprisingly, for the last few months, sterling has been very, very weak. It's been sort of the bottom of my strength matrix, and a lot of that is to do with Brexit, and a lot of that is to do with the kind of the absolute debacle that Theresa May is making of it. So earlier today, there was supposed to be tomorrow we're supposed to have the vote on her sort of Theresa May deal, the sort of withdrawal agreement, and then of course this morning what happened is it came out that actually looked like the withdrawal agreement was going to be the vote on it was going to be cancelled, and then invariably it was, and then Theresa May has come out this afternoon at 3:30 and talked about the sort of what she's going to do to basically cover up this absolute mess that she has created for herself. But as you can well imagine, that is actually given it's just, you can see yourselves there, ladies and gentlemen, it's just given us a huge drop there in sterling this afternoon. We can see if I just look at even just the pound against dollar. Okay, if I just look at here we go. If I just look at there on the daily chart. What I'm interested in is, in fact, I'm actually going to go to the weekly chart. So here's the weekly chart here, okay, and we can see that last year, okay, we were running up very, very nicely, okay, and sort of in a nice trend, okay, above the 20 and the 50, but then until we ran into the weekly 200 here, okay, the weekly 200 period moving average here. This gave us a bit of a double top here, okay. Not only that, we had here we go a weekly key reversal. Okay, I've talked about that quite a lot, enjoying the different tactics we talked about. We had and then basically since then this year, price has actually just fallen steadily. Okay, as let's call it like the shenanigans that have been going on regarding the Brexit announcements or the Brexit negotiations. We put in a low earlier this year. What's that? 126.16, 21. Sorry, I do apologize. 126.61. Okay, that was all low earlier. And then back in August, a little bit of a bounce up here, but it's a bit of it's a bit of a dead cat bounce. And what traders should be working on is the fact that we now prices. So we had a nice pullback here, and we talked about it on the Tuesday morning real-time daily trading ideas that I felt that this was like a bit of a scruffy flag, okay, that had been portrayed in the pound against dollar. If you remember, that's step 5, okay, and what we were talking about in terms of our trading sort of checklist or trading procedure. Okay, step 5 is is a part of a bigger chart pattern. Well, we've had a downtrend there. We've had price under the 20, under the 50, under the 200. We can see that the moving averages are in alignment. Price had a pullback. It put in a bigger chart pattern. And then once it broke, it came back, touched it, and then we can see it's worn through. And then this morning's order, today's sort of just daily Theresa May debacle has meant that we're now pushed to new lows for the year. Okay, so today we've been down as just a smidge above 125, and that's effectively you can just see that it's just been in a downtrend all year. We had a flag pullback in it before it broke down. We go down to the daily chart. Okay, you can see it there. You can see it there. It's very strong there. Okay, it's broken that. It's broken the lows of this year. Okay, they're at 2660. Broken those lows, and we're likely to close off that. As a trader, what I'd be looking to do I'd be hoping to see that drift back up to that price there around about 2650, and then if we got bearish signals there, okay, so there we're looking at bearish engulfing candles, pin bars, key reversal candles, okay, 1, 2, 3 patterns up here. Well, then I'd be looking at that as an opportunity to sort of establish another short position on the pound against the dollar there, okay. So we can see that, and what I look at there is that it actually, if I just draw this in here, it's a bit of a tight thing, but I talked about last week that we were seeing things coiling up a lot. That was actually to do with the dollar, but actually, we can see that a little bit of a symmetrical triangular downtrend. Okay, it's a continuation pattern. Remember, we did a session of continuation patterns a month or two back, and actually what we saw, we expect, because we're in a downtrend, we expect the trend to continue, and that's what's actually happened. Okay, and this is a case of a technical pattern also being confirmed by geopolitical events. That's the way we've done. If we go down to the sort of charts, you can go down through the charts a little bit more. Okay, into the hourly chart, what you can see we had there. I'll just go down a little bit longer, and what I'm looking at here is there. Here is we've had we broke that level 2660, broke the level 2660, and what did we have? We had a little inside bar that was also a pin bar before actually price sort of drove down. We tried to see price pull back up to that level, and Kane tried to push up, but it just couldn't do it. Didn't have the energy for it. Okay, you can just see that today has just been a day to be a seller. Okay, as I said, we had a break of that level, followed by a little inside bar, pin bar, and then prices dropped from what, 2650 to 23. So we've sort of dropped about 150 pips just there alone, okay, on the pound against the dollar. From the high of the day, we've dropped about 200 and about 260, okay, about just a smidge over sort of 250 to 260 pips, okay. And that has just come from the shambles of them this morning, saying that the vote would definitely be going ahead tomorrow by lunchtime. The rumours about that she was going to call it, and she sort of said that she was pulling it off, and then she would be making an announcement halfway, and that's how I've talked about sterling has been very much driven by the actual sentiment of the geopolitical situation at the moment, and that actually has implications to us. So tomorrow morning, what you'll find is, I'll be doing the real-time daily trading ideas at 10 o'clock. As always, I invite you to join me, and that gives you an opportunity to effectively to sort of to see what I'll be talking about in terms of the trading ideas there. We can see that the euro sterling rate, something that I talk about a great deal as well. If I just draw a couple of my lines here, okay, that I like on this particular one is that we've had over the year, okay, 90 has provided an interesting level in the same way that 87.50 did as well. Just let me draw it in. Okay. And for a long time, here we go. For a long time, actually, in fact, for about 18 months, what we've done is just really just banged around about there. We can see last time we got up there, okay, we had a big momentum reversal candle down the weekly chart. We pushed to new highs, but actually closed, a good bearish close. They closed beneath the close of the week before, and then the price drifted back down to that kind of 87 area. You see 87 area before it turns around, and now it's flown all the way back up. We had a big key reversal here, okay. See a big bullish key reversal, and now we're breaking that 90. Maybe if there's more of it, maybe we'll head back to around about that area, about 92.50. That's what I'd be actually looking at, okay, getting back up to that sort of 92.50. My first level of interest would be about 91.10. See how price reacts up there. Okay, that's what we'd be particularly looking at. And if I go to the 4Ms profile, which has got lots of the stuff that we just talked about, we would have a particular look at. We can see that that's oil, but we'll come back to that later. What we wanted to be able to have a look at is how that impacts the other markets around us. If we look at the dollar index, okay, we talked about that is just coiling up once again. I thought we might actually have a rollover on the daily chart. I thought we'd actually roll over, but actually you can see that we're actually getting a very strong kind of bullish engulfing pattern there. Okay, yes, it is a bit of a Q reverse, but I'd be looking at that we're actually in a little bit. Actually been in a little bit of a sideways price action there now for about the last week, and I just think we're going to have a little bit of a move to the sideways for a day or two. Okay, and I will just be sort of just trying to see what impact that can have upon us. And so tomorrow, what I'll do is I'll do a piece on sterling, okay, and then also quite a big piece on US dollar as well. So there you go, ladies and gentlemen. Hopefully you found that useful. Hope you found that interesting for yourselves. As always, if there's any questions, you can get in touch with your account representative and put them through. Next week we'll be looking at a little bit more of a kind of a trade review in terms of some of the methods we've looked at to sort of finish off this year. And then actually what we'll be doing is then sort of just setting the stage for what we'll be covering in 2019, which is rapidly approaching. As always, I appreciate you joining me today. As always, I'm very happy to have questions, and as always, we will. I look forward to either A, joining me tomorrow for the real-time daily trading ideas, or B, hopefully to see you next Monday, the 17th, for the next session of the Mastering the Forex of Trading webinar. Thanks very much, ladies and gentlemen, and have a good trading week. Cheers. Very welcome, Phil. Thanks for joining us again. I'm pleased that you were able to join us and enjoyed it. And I look forward to speaking to you in one of the other future sessions.